All right. You might remember that we covered this topic in some of our past session, but the subject is coming up again, and we wanted to talk a little bit more and to gather your feedback. And also, we are as you know, we are constantly innovating, constantly enhancing, and we wanted to also gather more feedback from you on certain suggestions. For example, the system does. So we have prepared a small capsule for today, but as I said at the beginning, I think we are going to discuss some more over certain topics. So once again, your feedback is very important. We have all those first payment, last payment, expected start, expected end date, and as Haley was showing her example on decreased asset, she went over those dates. So for terms and conditions, these are very important dates. In a lot of the situation, you will have those dates already at hand. You will have them from your contract based on your accounts payable policy. You will have them already. So it's easy just to enter them. But if you want to rely on the on some of the suggestion the system does, we're going to show you some recommendations, some suggestions today. Then other important dates, and when we're saying important dates, are dates that have an effect on the all column schedule, on the accounting translation of the details. So we get into effective date, activation date, and posting date. So we're going to look at some example of those. And I have here, and this is something that we will share with you. You will have access to some definition. We talk about all these important dates, but as an image and a demo is easier to follow than words, we're gonna jump into the demo right now, and you will have this deck for you to come back to follow that and to adapt it to your specific examples. So let's get into the terms and condition dates. And for that, I am going to share my application. I hope that everybody is seeing my application right now. I am presenting a contract that it's in defined status precisely because I want to go over the dates to input in terms and condition. So the contract is in defined status. I'm at the list component level, and that's where I first encounter the dates. And as I choose first, as you know, in Nakisa, you absolutely need to have at least a base rent, at least in this particular version. So I need to start with my base rent. So that will be my first choice here. As you can see, I only have one option. I'm going to make it a bit bigger so everybody can see. I chose base rent, the lease amount, this is something that you probably have in your contract. So now I'm getting into the dates, and normally following the order that we have them here, we'll start with the first payment date, last payment date, and then we'll continue to the terms and condition beginning and end date. But this, you can accomplish this only if you have already your dates at hand, you prepared something. Remember, we were talking some session ago about having your a list of payments based on your contract. So if you have that at hand, then it's easier to start with your first payment, last payment. And as you are doing events, this will be more clear when exactly is your first payment for these events. Now, if you are entering the contract and you just have your legal document at the side, what I would recommend is for you to start with the expected terms and condition, start at and end date. This is the beginning of the contract and the end of the contract. So if you haven't prepared something on the side, this is something easier to follow, at least our recommendation and suggestion. So let's say I have a contract that it's starting in January 2023. I know this is my start, and I can say, well, It says it's a 36 months, 3 years contract. I don't need any days. So I completed my start and end date. Now I'm coming back here to the payments, and based on what I know from our accounts payable department, I'm supposed to pay monthly, once a month. And my accounts payable is telling me, well, we're paying on the 15th, let's say. So I'm entering this. As I'm entering the first payment date, you notice that the system has already filled in a suggestion for the last payment date. But as the last payment date is not an actual payment date, it's just a cutoff. It's pretty much a date where we say, well, after this term, there won't be any more payments for this particular term. So after September 14th, 2026, I won't have any payments for this term for this contract. But as you are using templates, as you are using other ways of creating the contracts, you probably know already it's easier if you consider this property of the last payment as a cutoff, and you use the same date, the last payment date, to be as the end of the terms and conditions. So I I can include this in here. I can, and I'm sure that I will have my 36 payments. This is what I wanted to know. Of course, very important. Okay, my validation. I wanted to start with January, and I put September. Um, My first payment is on the 15th in January. So very important after this, my expectation is that I will have 36 payment as well. So the validation part remains, and it's very important always. And independent of what the system is suggesting, once you get to the schedules, it's very important that you verify the payments. So I've entered my base rent and I submitted it. One thing I did mention, and I put it in the schedules, is that depending on the terms that you choose, so now that you enter the base rent, you can enter other terms and conditions. So for example, if you're choosing incentive-free rent, for example, you don't need to fill all the dates. You will just have to fill in the dates related to the payments. The reason why is that, as you remember, the incentive-free rent is just pretty much telling the system what payments am I skipping, I'm not doing. So here, let's say I want to have 2 months free rent, and my contract started in January, and I want to have March and April 2023. So I'm going directly to my first payment, which is the first payment that I want to skip. I'm sorry. So I'm choosing the first payment date. And here for the last payment date, I do want to specify, well, how many months do I want to skip? I also want to skip April, and I can put the particular payment date. I can put a 15, or I can simply put the end of the month. But in this case, you might want to check and put the specific payment date. This way the system knows how many payments it needs to skip. Of course, I need to put amount, frequency, and payment frequency, and now my term is all correct and I can submit. There are other terms, and there are 3 type of terms: the prepaid, the incentive, cash, and the initial direct cost. You will notice that you have no dates to enter. All you need to enter is the amount. The prepayment in itself, it's a type of term that it's assumed to be before the end of the contract, so everything has to be recognized right at the beginning. So all the dates are set to the beginning of the ROU. As you know, the prepayment is only effective the right of use asset, so it's not going to have any effect on the liability. Hence the reason that all this setup that you see here is made. So you won't need to have any other dates for the for the prepaid, and it will be just the same if you're choosing to have an incentive cash amount. Of course, it will be of the opposite sign versus the prepayment, or if you have an initial direct cost, the same treatment as the prepayment. Let's say you are going even further and you have even one lease end type of term like the purchase option, and it will be the same for the termination option. The only date that you will need to select is the first payment date. So when exactly the termination option, the purchase option will happen. Now, this is about the four dates that we have: the first payment, last payment, beginning and end of the contract. Once again, very important. The user responsibility towards inputting the dates is essential. It's very important that the user check. It's very important that as you get to the schedule, you perform the validation of the payment. So in order for me to showcase that, I will need to approve this contract so we can get at the all column schedule level. I'm approving. I'm a power user in this build. And now I have the activation group created as I'm approving the contract. And in here, as I'm jumping to the terms and condition, I can see the terms that I have entered. I have my base rent, my prepayment, and my incentive free rent. Of course, you could have so many others, and as you are used to our upload features, you can upload so many other terms in here, extensions, and even lease end terms. In order for us to check the schedules, I will have to send to assessment. This is the point where the system is calculating the schedule. So now I can select.
Catalina.
Yes.
I think we have a question from Tiesa.
Yeah, go ahead, Tiesa.
Go ahead.
I was just like wonder, for example, if you have the payment frequency and the payment frequency as 0 and also the amount frequency as a 1 month. And in my example, we do like the payments monthly, and we are using we are using like one time, and the payment frequency we are using as monthly, and the amount frequency as one time. Is this the best way to set up in Nakisa, like amount frequency as one time and payment frequency as one time as well? Or if I do amount frequency as one time and payment frequency as monthly, it is correct the same time? It is the same.
Thank you so much, Tiesa. So first of all, there is no right and wrong. It really depends on your specific case. And in these scenarios, in the scenario that I'm showing right now, I have chosen one-time amount frequency. So let me just go back to the terms and condition, and you can see my amount frequency is one time, my payment frequency is monthly. What does this mean? Is that I'm performing every month a payment one time, and it will be the same amount every month, independent of something else. So even if I have partial month, I will still be paying this amount. Now we do have a lot of other options. Yes.
No, you go ahead.
Okay. We do have other options. So the amount frequencies, we can have it month, we can have it year, we can have other, and we can even have it day. But just let me explain a little bit. The amount frequency, it will serve to calculate how much you pay, and then the payment will say how often you pay. Depending on the contract, because the reason we have this option is in response of the terms and conditions that exist in the legal document. So you can have payments that are calculated per day or per year or per month. So those are the the type of amount frequency that take into consideration the specific number of days in a payment period. Whereas the one time, and I would say it is the most used, means that you make the exact same payment following this frequency, the monthly frequency.
So if I put amount frequency one time in frequency and payment frequency one time and January to December, they're gonna consider it one time until 1 year, for example.
It will
Correct?
be only, so if you put amount frequency one time and payment frequency one time, it will mean exactly one payment. And that's it.
It's not gonna count in monthly if I put the first payment date in January and the last payment date in December, for example.
No, it will still be only one payment. Because as I said, the last payment date, it's a cutoff. What we're saying is like after this date, I have no more payment. But the cadence and the amount of payments is based on the combination of these four: the amount frequency, payment frequency, and the first payment date. But what I was trying to show here, as you get to the schedule, that's where you can realize, for example, oh, it's not what I wanted. And if I look at the payment schedule, and you can see the payment really in the first section here, where you can see the period count, period month start date, the period payment date, and then you have the actual payment. And you could have a different type of payment terms. Very important, you can check here the total payments in this column here. This will tell you how much you are paying for each period. So to your example, TSI, if you put one time, you will see here only one payment, and then there will no longer be payments, and then will be an indication for you in case that's not what the contract says, to come back and do the modification. So that's why it's very important that the validations are performed. And one of the things that we typically recommend, as we know that more and more our clients are using the upload facility, so then it's not so easy to follow this. It will be recommended to prepare beforehand the payment schedule, so you can follow what you see in the all column schedule with that. Right?
Okay, thank you.
You're very welcome. All right, so we did a tour of those four types of dates that we have in the terms. Now we will jump into the activation date and posting date, and we'll come back to the effective date because this is relevant for events. So now, if I am happy with the schedules here, they match what I'm seeing in the contract itself, and it's based on the policies and so on. And I can go to all years to do some other preliminary checks, and some very, very easy to do is always make sure that your net book value is 0 at the end of the contract. Make sure that your liabilities are 0 at the end of the contract, but it all starts with the checking of the payment. So if your payments are the ones that you intended, the minimum lease payment that you see here, if your effective interest rate is the one that you intended, then everything else is just a calculation. So of course you want to check the others, the opening balance for liability and for asset, but in some instances that would require some extensive recalculation or validation. Keep in mind we are always being SOC audited, so those validations are already made for you, but you want to keep in mind to check the payments and interest rate. This is very important because it's based on user info. Once I'm happy with the validation, I can come back to my activation group and complete the activation. So I'm approving. As I have a double reporting standard here, I need to choose something for my US GAAP. You know already all these steps. As you have multiple contracts, you can do them through the workflow mass transition, so no need to do them step by step. I need to set up a reception date. And this is where we get into one of those dates that it is important, but has less relevancy into the calculation. The reception date is pretty much a date when the goods are received, and this is something that you can use for asset tracking, so you can include that date. So it's something that you will need to enter, but it will have no effect on your calculation. So at this point, I'm ready to activate my contract. So I'm clicking into activate, and I have activation date, posting date, and document date. 3 other dates that we are talking about. So the activation date, this is really the date of putting in service of the asset, the date when we'll start using it, we'll start calculating depreciation. Typically, the system is going to suggest something here. It's going to put the beginning of the contract, the beginning of the ROU. However, you have the option of changing even that. In a lot of situations, you might have a delay in putting into service an asset. So instead of January, you can select, for example, February. And for such a situation, you will get this warning in here. For the time being, it is a warning, and there isn't an additional validation that we can enter. So that's very important for the users to make sure that if they have a situation when the putting into service is delayed, yes, they should be using an activation date, which is after the beginning of the ROU. But if it's not the case, to really check this part. So the users will get this type of message telling them that the input activation date is different from the ROU, and of course asking them, are you sure? But if they don't necessarily, if they do this by mistake and they click submit, there is no turning back for such a contract. So everything will be pushed, everything will be, all the schedule will be pushed by 1 month. So this, again, it's a very important step and something to be confirmed, to be validated prior to activation. Now, the activation date, we talked about this, the posting date, and I remember Haley mentioned it. This is your accounting recognition date when it will appear, especially for your ERP and for those of you that are SAP integrated. This is the date when you are going to see the affectation in your GL's accounts. So you might want to consider your posting settings in Nakisa to make sure that you are in an open period when you are choosing your posting date, or if you are choosing a posting date that is different than the activation date. I'm going to go with the same as activation date. The period is open here, and the document date is simply a traceable date. If you want to say, well, you know what, I created this document in September 18, so that's what I'm going to use. So this is just for documentation purpose, and it's an user input choice. Well, I'm clicking submit, and I will have my contract activated. So we went over the some of the dates that have no impact in the calculation or the all column schedule, but they're nevertheless important. You can use the document date for reconciliation purposes, for example, to check those entries that you made at a different date than they were supposed to. And I realize we only have 4 minutes left, so I'm just going to talk a little bit more about posting date, and we'll leave the rest of the topics for next time. As I'm going into the view postings, and I'm going to perform a manual posting here, but this is exactly the same for all the entries that you perform in batch. We are going to see once again document date, posting date, and we also have translation date. Once again, the document date might, and now I'm stressing on the might not have any relevance unless you are linking the document date to the date of the recognition of the company currency translation. So this is a setting that you can set up in the backend, and I want to get you to that. As we are in the backend in the manager page or in the master data configuration, and if I'm choosing a particular company, I want to point your attention to something within the accounting setup. For the exchange rate type, you can choose whether your translation date type is the posting date, the translation date, or the document date. So document date might have further relevance if you are linking the document date to the translation date type. So this is relevant for all the companies, for all the applications that are using parallel currencies. So they display the transaction not just in contract currency, but in company local, and further on, of course, for group currency. So the document date might have more relevance than just tracing the details if you are linking it to the translation date. Now the translation date as well, as you can, as you saw in the settings, we can link it to the date when the system is going to look for the spot rate to have this transaction entered. But you can also specify it on for a specific case on the spot. If you have certain settings and you wanna apply a special rule for a certain entry, you can use the translation date and input the exchange rate. And this is also going to be available. All these dates are also being available in the batch posting, so you can do the exact same entry. And so I wanted to open the floor to the questions if they are, and as I mentioned, we will continue our talk on the dates in Nakisa.
So there is no hand raised for now.
Okay, so anybody has any feedback? All right, I had a last announcement to make, so I'm coming back to my presentation. So just to recap a little bit, as we talked about the dates in the terms, activation date, posting date, we haven't got to its active date. We're going to discuss about that next time. We'll be sharing with you all the details here. We, however, started to talk about some of the other dates. We talked about the document date, the reception date, and translation date. And we'll be covering the other dates in our next session. But before you go, I wanted to tell you that we'll be hosting a webinar to talk about the evolution of Nakisa Financial Suite and to talk about our next generation. And this webinar is going to be held in October. We have the link for you to enroll. I'm going to be one of the speakers along with our director of product, Arun Taneja. So we welcome you to come in great numbers, and if you have questions to direct them to me, you have the contact as you register as well, and really quickly to show you our link here. So the link that you will have in your deck will get you to this page here for you to enroll. And by the way, as we have Alana here, we'll be giving just a quick peek, a sneak peek into this version in the user group that we'll have this Thursday, and we hope you can come as well. So thank you, everybody. We'll wait for you on our next session in October. Take care.
Thank you.
Thanks. Have a good day.
Thank you, everyone.